Welcome back, folks. It's Mark Montet here from the FEX Insights podcast and Not Centralized. Welcome to episode 17. First off, we're going into the news. And in this week's news, we're highlighting some things from overseas as well as some important local trends. So firstly, we see Finality. They are raising a $136 million fund with backing from big banks. So the blockchain-based payment settlement firm Finality secured a sizable Series C round, so not a fund, but raising it for their platform. And that's with backing from Bank of America, Citi, UBS, Goldman Sachs, ING, NASDAQ, and State Street. The plan is to extend its blockchain network to more currencies and expand its usage just beyond sterling. So you can see this FN London article here with a bit more details, but you do have to subscribe. Next in the news, we see this article from the Financial Times, and this is all about Circle. It says that they consider reversible transactions for institutional use. We can see that they're exploring a mechanism that allows refunds or dispute resolution via a counter payment layer, rather than directly altering on-chain records. This is interesting, but certainly controversial, given that it departs from the immutable ethos. It's always been a thing in blockchain about not being able to reverse transactions, but having another way to record that. We've seen things where it involves a, say, counter transaction on chain. In this case, it's something that is a little bit different, so they're not going to alter those on-chain records. It signals, though, how stablecoin issuers are adapting for institutional transactions. And as you can see from the article here, what they highlight is some quotes from their president, Heath Tarbet. They're thinking through whether or not it's there's the possibility of reversibility of transactions. At the same time, they want settlement finality. So being able to have that finality, but the protections and the reversibility that you get in traditional finance. So there's a lot of strengths of blockchain, programmability, transparency, but that immutability layer is something that is a strength, but does not work necessarily with how things happen in the traditional markets. And has always been one of those complaints, or what they call FUD, fear, uncertainty, doubt, the typical name for critics and critiques in the blockchain space. So really interesting insights here that Circle is looking to have that kind of stuff, counter payments as they're calling it, and you can read more in this Financial Times article. Next in the news, we go to something called Project Ion. It is all about capital markets and blockchain regulatory framing. This is an opinion piece that you can see here from Bloomberg Law. It argues that regulators need to adapt to blockchain in capital markets, pointing to systems like DTCC's Project Ion. This is for processing equity transactions in parallel to legacy systems. The argument is we shouldn't throw away market integrity, i.e. fairness, settlement rules, but actually evolve them. And that is interesting, having these systems run parallel and side by side, because if you think about it, blockchain is not going to just all of a sudden overtake how existing systems work. What's going to happen is that there'll be stuff that happens in parallel, or it'll be blockchain systems running with APIs connected to existing systems. It'll be about transforming smaller parts of the process rather than everything at once. A whole lot of pilot projects like you see with Project Acacia, and now we're talking about Project Ion. So it's about these tests, it's about these integrations that are done piecemeal, that are done in smart ways before you evolve a whole system. And as you can see from the article here in Bloomberg Law, there's a whole heap of details about that. Wall Street's definitely embracing the technology, but we have to be pragmatic in terms of how it's used and transformed. So you can read more in this Bloomberg Law article. Next in the news, it's all about Maestro. So as we can see here, Maestro launches an institutional Bitcoin native financial infrastructure. So they're a Bitcoin native infrastructure provider. They've launched a platform aimed at asset managers, corporations, and custodian institutions to better deploy and optimize BTC in institutional settings. This is part of the shift towards on-chain finance for trusted counterparties. And as we can see in the article here, over $150 billion in BTC sits idle on US corporate balance sheets. A whole lot of treasuries are there. An estimated $2 trillion in BTC supply is held in custody or cold storage. So there's a growing institutional demand to turn Bitcoin into a productive yield-bearing asset, especially for TradFi. So really interesting stuff here in this article on Maestro from Business Insider that you can check out here. For the next article, it's all about crypto treasury again, and we're heading over to the Wall Street Journal. As you can see here in this article, US regulators, the SEC and FINRA, are probing unusual stock trading activity in company planning crypto treasury strategies, concerned about leaks, selective disclosure, and market fairness. As you can see from the article here, which you have to subscribe to, the financial regulators have examined unusual trading patterns in shares of companies. So a lot of that stuff being on chain, it is hard to hide. So if you are using it for nefarious purposes, trying to skirt SEC, in this case, type laws or whatever financial markets institution regulators there are out there, then it certainly will be found out. So the investigations continue. We're going to see if there's truth to the usage of companies doing crypto treasuries or if there is nefariousness. All about that in this article. Next, we're heading over to Cointelegraph for this article on new regulations exposing blockchain's privacy and compliance gaps. The US regulatory framework signals acceptance of crypto, but most blockchains lack the privacy and compliance features that institutions need. So this is more about that institutional adoption. Typically, blockchain has not been in that space. As we've said and seen it before, stablecoin usage was much more of a retail tool rather than that for institutions, although it's now tipped the scales in terms of the most usage is for institutions. But as that happens with other blockchain features, there's going to be more of a need for these things that instos need. So what we're seeing here is that for more than a decade, crypto in the US has existed in this legal gray zone, with regulators having wavered between silence and all of a sudden there's crackdowns. We've seen that here in Australia as well. That's left developers and investors and institutions paralyzed with doubt. 2025, definitely this has started to change with the Genius Act and the Clarity Act, and even the White House has shifted its stance. But infrastructure with other intentions, as they say here, today's financial rules were drafted for a different era and they struggled to adapt in this digital age. Blockchains were designed to promote trust and resist censorship through radical transparency, but this design now clashes with modern expectations around privacy, selective access, and compliance that you typically see in traditional kind of systems. Makes it difficult for blockchains to comply with governance frameworks born of political processes. The European Union's General Data Protection Regulation, or otherwise known as GDPR, has given users the right to be forgotten, yet data cannot be altered once published on blockchains. And just as we mentioned in that previous article, like Circle and other companies are looking for ways to alter that. So to still have the strengths of blockchain, but with the privacy and the regulation requirements that are befitting of traditional financial systems. So really interesting stuff that we see here, whether it's healthcare or other industries, there is this need to comply if you're going to be used. And certainly it looks like blockchain is up to the challenge there. And closer to home, we've got some major news that's come out of Australia. One of those was an acquisition, and we can see here that IG Markets has acquired Independent Reserve, one of the oldest crypto exchanges in Australia. We can see the details here. IG Markets was pleased to announce the acquisition of Independent Reserve for an initial enterprise value of $178 million. So not too shabby there. Congratulations to Adrian Lee and the team over there. The bolt-on transaction accelerates IG's entry into the cryptocurrency markets in the Asia Pacific region, bringing a talented team of crypto native specialists to the group. And we know a lot of that team, having run events with them in the past, having known them from the space, and even going to Independent Reserve events where it was celebrating their birthday and other scenarios. So really interesting stuff that the guys have done. They've been around since I think 2013. So it's been great to see their growth. And this is certainly another big step in the growth of the whole kind of crypto markets in Australia with an acquisition. We've seen some other ones like SwiftX, for example, acquiring Caleb and Brown earlier this year. IG Markets now getting into this space. Companies that are coming into Australia and that Asia Pacific region from that global standpoint, and bringing along crypto specialists that can help them expand is really the key. And it's been a bit of a core theme of 2025, and we'll probably see that continue. But for now, congratulations to the team, and we look forward to seeing what they'll be able to achieve in this collaboration. Staying at home in Australia, we see some new regulation that is being proposed. So from the Commonwealth Treasury, they've got this regulating digital asset platforms exposure draft legislation. Now, for those folks that are tuning in from home, exposure draft means that it is the stage before it goes to be read into Parliament, and they do the process of seeking royal assent, etc. So this is making sure that it is very close to getting regulated. And what they're focusing on here, you can see some details in a variety of papers. There's the exposure draft legislation, explanatory materials, a fact sheet, and consultation questions. So this consultation is open, and just like views in the past, many have been shared by industry and will be shared, and we'll see how we go as part of our own kind of works from the not centralized perspective, as well as what Oz DeFi Association is also going to contribute. We'll probably collect some answers there as well. And also, here's some TLDR in terms of what is going on in this legislation that's being exposed as a draft. It's looking at digital asset platforms, new framework for platforms that hold crypto or other digital assets for consumers. There's a focus on custody and trading platforms. There's also a focus on safeguarding customer assets, disclosure rules, and redemption standards. For stablecoins, they're looking at stablecoins being treated like other stored value facilities, subject to payment licensing reforms and AFSL obligations. There's also rules around reserve transparency, redemption rights, and disclosures. There's also some details on the Advanced Regulatory Sandbox, the ERS, and there's a review plan for later in 2025. Sandbox lets firms test new products without a license, and so some firms have already been doing that. There's also some innovation streams that are being spoken about here, with Crypto Asset Reporting Framework, a CARF, aligning with 60 plus jurisdictions to share tax data on crypto. They also speak about the RBA and Treasury's exploration of wholesale CBDC use cases, not retail yet. We know that with Project Acacia, which we are lucky enough to be a part of, and much more details there. Some further information about that that we were able to dive into and look at from the papers includes that for DeFi, that whilst it's not really direct rules just yet, it's more exemptions that are being provided. They are watching global approaches, it says, before creating any sorts of actions there. So this is more on the centralized side of things in terms of crypto asset providers, digital asset providers, but DeFi is not out of question just yet. And there's certainly some innovation pathways there. We saw recently, I think it was like a week ago, or maybe it was like 2 weeks ago, that there's exemptions being planned for stablecoin providers. So paving the way for innovation through exemptions. So really keen to see all of that. But in terms of digital asset providers and stablecoin and other folks that take care of these assets, it's looking like there is some movement there in line with what we're seeing overseas, that positive movement, that clarity that regulation provides. It's really becoming clear, and we hope that that's going to drive a lot of innovation for the space. And lastly, if you're tuning in, this show probably is going to go out after the fact that we've had the Oz DeFi Association event. We'll see if we can get it out earlier. But in the meantime, what you can see here is on the website, we've got the defi.org.au website. If you log in, what we've got here is a few things that you can do. And one of those is go to the events page. So in this tile here, you'll see the event for the 30th of September. And we've got two speakers that are being shown here. So Laszlo and Kirk. Laszlo is from a project called Origins Next. It's come out of the group KPMG, so the Big Four consulting firm, and they had empowered this Origins project, which is all about tracking and tracing and supply chain and using blockchain to do that. That's been taken out. It's now called Origins Next, and we'll hear from Laszlo and the work that they're doing there, the very important work in terms of using blockchain to help with that tracking and tracing, which is becoming more important. It's even being required in terms of legislation and regulation in Europe. So we'll be really keen to see how that is growing. And then the other one is Kirk Baird from Sigma Prime. And for folks that don't know Sigma Prime, you really need to thank them, because they provide software through their Lighthouse system, which empowers over 30% of the nodes that run Ethereum. So if you've used Ethereum, or you're using other blockchains that have been inspired by Ethereum, they wouldn't be around had it not been for the work that Aussies are doing. So this episode of the Oz DeFi Meetup will be all about Aussie innovation. And so you'll get to meet these founders. We'll have a lot of questions for them, a lot of networking and interactions, and better yet, if you've got questions, you can fill those things in here. You can put it for whichever speaker is speaking, and we can direct it to them during the show, or we can do it even after. So we have a whole heap of networking both before and after, and it's going to be certainly interesting. Anyway, that's it for the news. Hey folks, for this part of the FEX Insights podcast, I wanted to go back to the AusDeFi website and show you some things that have been created there to help with advocacy for the blockchain space. So first of all, we're going to log in. I'm going to use my email and password. It is free to sign up, so you can certainly do that. Now, there's a bunch of tiles that are here. Obviously, you got the watch for the meetups and podcasts, similar to the FEX Insights podcast. And the website there, you can actually watch all of these interactively. But one of the new resources that we've got is something called FUD responses. So FUD stands for fear, uncertainty, and doubt. It is basically critiques in the crypto space. So if we click on this, I'll show you what we've got there. So what you can do here is you can cut and paste, type in or click on one of these example critiques. So for example, RWA tokenization, which we have spoken a lot about on the FEX Insights show. We brought on researchers from Kaiko. We've spoken to Arturo from Not Centralized about Project Acacia. We've spoken to others that are part of these sorts of projects, such as Michael Vanderdonk of the Australian Bond Exchange. So here we have an example. You can click and it will bring it up here. RWA tokenization is just hype with no real benefits. Let's say, for example, we want to add to that. There are no real great trusted measures there, for example. Let's just take a look at that. You've got some things that you can do here, such as change your response tone from being more formal academic to being less. You can change it to a brief overview to something more in-depth, and then you can change who the audience is, as well as the primary focus. So just doing that, what we've got running in the background here is that there is some evidence documentation that is used to answer the question from what the critique was. First of all, we actually break down the critique into sub-arguments. So one of those is RWA tokenization lacks benefits. Another one that it recognizes there's no trusted measures. Another one is the market is driven by speculation rather than utility. And all of these are then responded to. And as part of those responses, specifically for this critique, we also provide supporting examples that you can click on, and it will take you to another website and you can see the evidence there that we've gathered. So there's been work in the background. You can see and try out this FUD response generator yourself. That is in the AusDeFi website at defi.org.au. Additionally, when you go to the meetups like we just had earlier this week, you can go to the page here, see the different speakers. You can even see if there are documents that have been added to that. And if people have questions, we will be able to answer those questions and respond. You can ask questions from any of the speakers here. You can submit anonymously. If you are a community member and you have had your profile created, and that is something where you fill in your likes, dislikes, etc., details about yourself, you will come up here. So I've answered this question. You are looking at this from an admin point of view. You won't be able to add documents yourself in here, but I will. And they will be the documents where you can see and go through the slides that were presented on that night. So more to come from there. The next meetup is also going to be shown there. Another thing that we've got that is new is the fact that there is the consultation process at the moment for the new bill for digital assets and tokenized custody platforms. That is something that is out by the Commonwealth Treasury. They've given until the end of this month to actually provide that review. So what we've got here is that as a user, obviously you won't have the edit or delete things, but you can go in, read the related documents, and add your feedback. By adding feedback, you can reference specific sections, add points to the specific sections that you would like, and submit that feedback. We're going to be collecting all of that and providing a response from the Australian DeFi Association. And certainly the next guests that we have on will probably have some feedback on this sort of stuff as well. So collating all of that, working with partners such as the Digital Economy Council of Australia, Not Centralized, even FEX Global and others. It's going to be interesting to see what people have as feedback, and we'll help collate that. So those are the main things there that I wanted to show as part of the Oz DeFi Association. Obviously, like I said, you can go ahead and watch some of the podcasts that we've got here. Whilst you're watching, you can click on the buttons, just like on the FEX Insights page, get simpler explanations, FAQs, or even ask the AI. So this was all about RWA tokenization. Give me a summary of the podcast. And so we can take a look at that, and it will create that summary or anything that you ask for. You might want a LinkedIn post. You might want some things explained in more detail, but all of that is there. So that's what we have as part of the rest of the page. There's other advocacy tools. There's going to be more in terms of the blog and anything else that we think would be useful for the blockchain world. So anyways, back to the rest of the show. That's it for this episode of the FEX Insights podcast, and we thank our friends and sponsors at FEX Global, and we're looking forward to bringing you more of these shows and insights soon. See you next week.